Okay, good morning. Morning guys, morning girls, morning traders, and the like. Now, as of today and tomorrow, I'll be coming on an hour before the London opening due to family commitments and Friday normal. But as of next week, we're going to be streaming at this time, which is an hour before the opening. That's subject to change depending on the room numbers. It's possible that we could do it a couple of hours later, and then Tony comes on a couple of hours later, so we spread it out that way. But at the moment, we're going to test it at this time to see what the feedback is like. It suits people in the Asia Pacific and doesn't really suit the US so much, but it does maybe suit the UK. Anyway, you can play it back either way. But it's only going to be like a 25-minute stream in the morning because I do have to get family out to school and what have you. So just have a look at what we're seeing in the markets this morning. Overnight in Asia, continuation of risk on into the markets, and this has been the theme now pretty much all week. We've got the weakness of the Japanese yen. We've got the buoyant stock markets around the world. US, France, German markets, Nikkei last night. All the Asian markets are up. Okay, so all markets are in a buoyant mood. This is a sign to risk going into the market. But boy, gosh, does this look extended at this moment in time, especially against some of the stronger pairs like the euro and the British pound. We're going to come to that in a moment. Morning, Sungate. Looks like you've just woken up. It's been a stressful morning. I've had to get 2 out to school already. I've got another 2 to go. Yeah, I had just woken up. I woke up at 5 o'clock. So let's have a look at, first of all, let's have a look at the US dollar. We spoke about this last couple of streams. US dollar is at this level, this key important level. Okay, this is the one. This is the one-day chart. This is the Trump candle, if you remember, and this is the Trump line that we are looking at. And of course, we are just at this Trump line at the moment. It's 98.60, bang on the Trump line at the moment. So market's looking for some direction in terms of dollar. What you've seen at the moment over the last couple of trading sessions really is the weakness of the Japanese yen, the strength of the pound and the euro. But the US dollar has really been doing not a lot. It's been sort of sitting in a tight range, just like trickling lower, and it's coming to this level of support. And the US dollar now is really looking for some direction in terms of policy coming out of the US administration in terms of tax plans for the year. They're due to put out some outline today. I think the market is really getting a little bit fatigued with a lot of talk and no action. So we'll see what they come up with today, and this is going to possibly give us a bit of direction on where the dollar goes. Of course, we've got numbers out later on in the week in the US, but today's quite an important day, and also there's a possibility, that, very unlikely, but there's a possibility that the government could go shut down on the day itself, on the 100th day itself of his presidency. So the markets are also concerned about that, and if that were to happen, as I've said a couple of times, bond yields will be under some massive pressure. Back down to 210. I mean, even hitting 2% on 10-year bond yields. I mean, it's unlikely to happen. I mean, they've got a majority in the House and the Senate and Congress and so forth. So it's unlikely that will happen. But it's certainly a pressure on the US dollar should it happen. So the dollar's not really moving very much. If you compare the dollar with the Japanese yen, I know we all know this is going to look like, but just to reiterate what we're saying on the strength chart, so the dollar is grinding lower. And the dollar yen is on an uptrend. Just bear with me a sec. So this is basically all yen weakness. This is all the yen weakness at the moment. Certainly not anything else. Not dollar weakness. It's not dollar strength, of course, because dollar's proving down. So this is all dollar, all the yen related yen weakness. Now let's just have a look at the dollar yen. So dollar yen now, we're into the 11.30 area. At some point, I've been saying this now for a couple of days, and I haven't been trading it, which is maybe just as well because it's been grinding higher. But my bias is just not to get long on this pair at the moment. I'm not a counter trend trader. We are into a resistance area here to the upside, selling around these levels. Up from 11.20 up to 11.50, anywhere within this area of resistance potential is potential for it to roll back over. Now all we need to see is a bit more sort of reversal of the yen positioning that we've seen over the last few days, and at some point they will have to reverse. Jenny was right earlier on the stream. They're going to peak at some point. It's just when. Catching 40 knives and trying to pick tops is a difficult business. You've got to have your mindset right for that. It's not something that I feel totally comfortable about. You can't control what's going on in the markets at any time, but you can control how you can control your emotions. And the way to control your emotions are not to trade environments or styles that you're not comfortable with. So I don't necessarily trade counter trend, and it would have been in my interest not to over the last couple of days. With the strong trends that we've seen. But if you were to consider this, certainly if you're long, I'd be looking to get out around here. If you are looking to short here, I think this could be a level. And if you are looking to short, there's an obvious place to place your stops. You place your stops, basically 11.75, 11.80 level. That's a good stop area. So it's a 25, 30 pip stop. If you really want to be conservative and look for a bigger play. Shorting at 11.50, you can have easily have a stop above 12.20 for retest back down here. So risk reward, this all you need to see is the dollar come under big pressure, and the yen positioning reverse or abate. You can see a 90 pip stop. You can see a 200 pip gain. I mean, there's a 2-to-1 risk reward there ratio. It's only a couple of days ago. Lows of yesterday was only it's almost 200 pips away from the 11.50. We're at 9.50 on beginning of the week. You sometimes forget the moves that you've had, and this is just basically all yen weakness. So if that was to reverse and the dollar was to come under pressure, risk reward trade to the downside, 90 pip stop, and it doesn't even have to stop there at 109.60. I mean, if it breaks the 109.60 area, which is the French election area, this is all the French election. We were back down. We were back down 250 points lower. So risk reward ratio, selling dollar yen is something that you might want to consider. Now, I cater for all on the stream. I talk about levels and what have you, but it's not necessarily something I'll be doing purely because I know my emotions with trying to pick tops and bottoms. If I was inclined to do it, it'd be on a longer time frame, i.e., the 100 pips stop and the 200 pip take profit, rather than intraday trading. Intraday trading, you're just going to get it could bleed you, as it would have done for the last 2 days in some of the major pairs. Is there a risk for a financial shutdown possible? There's a risk, of course, but I mean, they've got to get shut down, but they've got to get funding from the houses, both houses, and the Republicans control both houses, so it's unlikely that there will be a shutdown. As it was pretty much, throughout the last 4 years of the Obama campaign, Obama presidency. There's always potential for a shutdown, but they've eventually got it through. It's just these people are just, they might. Well, we've got majorities in the House, so it's unlikely that there'll be a shutdown. But there might be some manoeuvring on the financing of the Mexican war, of course. yeah, I mean it's unlikely. But if it did, you know, it's weighing on the markets. And markets is the same as you know, the French election. I mean, you know, it's very likely Macron's going to get in, but there's a risk. You know, there's a possibility that Le Pen could, you know, could cause some serious damage. I mean, you know, at the moment, you know, there's talk in the on the wires today that Mélenchon is you know, not throwing his support behind Macron. You know, this is, you know, so there's all these rumours are coming out all the time. So there's always risk, is what I'm trying to say on that. Anyway, so that's the dollar yen. Now I want to look at the two pairs yesterday that we were sort of focusing on in the room, and I actually did very well on the pound yen yesterday. I had 4 consecutive winning trades and then decided to walk away from it. You know, and in hindsight, you know, it just carried on. But look at the pound yen. Now, I spoke about this last night in the stream yesterday, in the evening wrap, which was at 6 p.m. London time, which is 3 a.m. Sydney time. So lots of Asian wouldn't have been Asian Pacific areas, Pacific Rim area would not have been online. But this is what we're talking about. And I basically looked at a target level for the upside. Now, it's not rocket science. I took a fib level from basically the open on Sunday night, Asian markets Monday morning, from the French election move. Okay, so this is the gap created by the French election. We almost gapped down. We missed it by about 15 pips to fill that gap, and then took off back up in the northerly direction. So I took a fib basically. And this level, this Mizubu candle here, this is the 1 hour chart. Mizubus are the long candles that don't have any real considerable wicks at either side. They're just a big momentum candle. When you see candles like that break through significant levels of resistance or support, that can quite often signify that we're seeing those stops being hit. You know, combined with some people that are looking to trade breakouts. Now, all depending on how much the stops are, depends whether it's going to be a fake breakout or you know, to retest the lows or the highs, depending which way you're going, of course. But this is basically a stop candle, and the momentum carried on. So I took a fib level from the high of the high of the French election back down to the low, and projected out a 161.8 extension. 1618. I'm not a fib fanatic, right? But I keep them on my screens. I look at them because I know people do look at them. You know, I know 50% is not a key fib level, but 50% retracements are big levels. 50% extensions are big levels. 100% extensions are big levels from key areas. You know, and the markets do respect them. So anyway, so I took a fib level from the move from the open down to the low, and the 1.618 extension came in exactly where we are now almost. This is on from last night. So the fib extension comes in at, well, basically a 143. So you've got confluence there of the round number. It's the fib 1618 extension from the high to the high to the low, and if you look out further, it's also a level that's been respected in terms of the resistance on the upside prior previous support, obviously around numbers. So pound yen at some point is going to run out of steam. Of course, we've still got buoyancy behind the pound with Brexit negotiations, British elections not looking, you know, as though it's going to be anything other than a big majority for the Conservative leading incumbents at the moment. So, you know, this is you know, reasonably good for the pound. Pound is strong, and yen weakness, but at some point it's going to turn around. So you've got to find a level. Now, if you look here again, I mean, this is I hadn't seen this earlier, but the 2618 extension, you know, 2618 extension. I mean, it's ways away, but exactly where that top is there on this from the 27th of January, the 2618 extension from that move. You know, so these levels sometimes, you know, you look for confidence levels. You know, it's possible target levels. These, I mean, 143 could possibly be the top of this bull run. You know, let's be honest, it's been a fantastic run. I'm concerned. I'm I'm concerned about markets when, you know, we've had, this is from the 18th of April. You sometimes lose perspective when you just day trade, don't you? For 17th of April, 750 point move in pound yen, pip move in 9 days. I mean, boy, gosh, that is a massive move. At some point, you know, I mean, it's taken from basically, you know, it's taken from 2 months move to the downside, retraced in 9 days, in basically 7 trading days. It's a big, big move. At some point, that's going to have to run out of steam, you know. So you've got to pick your levels at some point. Possibly 143 handle could hold pound yen. Now we'll see. You could be, I could be eating my words in a few hours' time as this motor's back on, but mindful of that. Now, I mean, if you look at the euro yen, I mean, the same thing happens in the euro yen. This is not a coincidence, guys. I mean, I've done exactly the same analysis on the euro yen. It's the 1 hour on the euro yen. Well, it doesn't matter what it is, but it's the 1 hour. So you've got the top of the open on Asian session Monday morning, down to the low, pull that fib down, pull up the extension. The 1618 extension comes in exactly where we are now. I mean, this is where it's stalling. This is where it stalled early on in Asian session. You know, 3 hours into the Asian session, it stalled. It came back down. It's back up at these levels again now. Euro yen is at the same 1618 extension level. So these levels are, you know, are pretty significant. And again, if you look at the, this is not well, it's turning out to be a stream on fibs, but I mean, but look at the 2618 extension level, exactly where that support, where that resistance comes in. So these levels are, you know, if you're looking to take profit targets if you're long. I mean, obviously, I've still got to play this for the trend continuation trader as buying pullbacks. I'm not going to sit on my hands now for you know, for the rest of the week as this does, if it motors on. I mean, I'm still going to be trading it to the long side. I'll be looking for pullbacks, but I'll also be looking for areas where I would be looking to you know, exit, and these levels are critical. So here we are at the moment. We're at a level here at the moment, 121.90 in the euro yen. If we motor on through there, then the next level to the upside basically is a couple of 100 points higher. Then you've got the 2618 extension. I've never looked at really at the 2618 extension. I'm just seeing it at the chart now as I have it up. I look at the 1618 extension for targets, but the 2681 is coming in as well. Okay, so looking for entries. I mean, at the moment, Euro's been buoyed or supported by the potential for ECB talk today. ECB announcements. Today we've got tax. We've got the ECB out, which is just bear with me. I think the conference is tomorrow, isn't it? The talk tomorrow, in terms of so the ECB is 1:30 tomorrow. Yeah. So this is basically being buoyed by talk that the ECB rate decision obviously is not likely to do any change. In fact, the markets are not expecting any change. The ECB best press conference is at 1:30 GMT. This is tomorrow, by the way, of course. So the markets still buoyed by the fact that there could be a change in sentiment in terms of their rhetoric in the press conference that follows in terms of tapering. He's looking at the currency markets. I can assure you, he's looking at this. He's looking at the big moves. He's looking at the French election results, and he's looking at the markets. And last month, if you remember, with their press conference, they were misinterpreted. I hate using those, but they were misinterpreted apparently in terms of their hawkishness, and they corrected themselves. So the euro ran ahead of itself, put on a couple of 100 points, and and then they corrected themselves sort of later in the week, on the Friday of the week, and off came the euro back down again. But they're not going to be, they're not going to be so flippant with their remarks this time in terms of not being misrepresented. But you could find that they're going to be erring on the hawkish side. If they err on the hawkish side, then this is going to confirm the euro strength at the moment, and the euro will continue up to the upside. So this is what the market is looking at. If Draghi turned around and he's really dovish in terms of rate policy, then you could find us moving back and having a correction in the euro. So this is a very important press conference tomorrow from Draghi. So do definitely keep an eye on that. At the moment, euro dollar, it's sort of holding. We'll come to the euro dollar in a second. It could be, you could be back down to 107.50 on anything bad news. Right, so that's the euro yen. Still playing it to the upside. Buying pullbacks, of course. My next level I'd be interested in getting long of the euro yen is going to be around the 121.30 level. Mindful that if you break the 121.30 level, you're going to have stops back down to this, the Asian opening on Monday, which is at 120.70. So buying here, I think you're going to, this is a key level. This is definitely a key level. It's definitely saw stops and breakout traders coming through it. It's going to be a support, and there will be stops below here. But still buying euro yen to the upside for continuation of the trend. Mindful of that level. If you're counter trend trading, then you know my levels on those pairs. Let's have a quick look at the euro dollar. Obviously, euro dollar is not doing very much in terms of dollar flatlining. So it seems to be holding around the 109.50 level, testing it now. Now the same theory of the 1618 extension was this level here. Let's just widen. Okay, this level here. Very messy charts, those. All these fibs on here, but excuse me. So the 109.50 level is looking like holding. The target. I beg your pardon. The target on the on this fib level is here we go. Sorry, I knew I was looking at something wrong there. So if you take this move here in the from Asian to the low, Asian opening on Monday morning to the low, the 168 target level on euro dollar. We haven't got up there clearly because of the dollar flatlining, as I was saying. But the level on the upside is 109.88. So you've seen those levels hold in the euro yen, in the pound yen. Euro dollar at the same level equates to 109.80. So 109.50 level is holding the euro dollar at the moment. Selling these levels. Selling these levels for a pullback in the euro. These tops are going to be above 109.80. Now, I'm also hearing that there are bank sellers above 110 to 110.50. So, to make a move above 110, you really need something really, really hawkish coming out of the ECB tomorrow. So that's the level on the upside that I think you should be looking at, 109.80. If it breaks down the 109.50 area. At the moment, I'm not really inclined to I'm not really inclined to get too involved in the euro dollar. It's something I prefer to use something that's got trajectory in both directions. And at the moment, we're not seeing much move in the US. More so in the to the downside. You have got the CAD and you have got the yen basically to the downside. Intel I like the fib, but fib, no, 50% is not a fib level, but it's a good retracement level that we look at. Potter, I like the 50%, but that is always yes. Yeah. Okay, I'll leave that one. Just then, so on fibs, I'm not a fib trader. I know this is sounds like a fib stream, but they are levels that the market looks at. As I mentioned, the markets look at these levels. I mean, it's just the way it is. It's like a self-fulfilling, fulfilling prophecy. It's like the like gaps. I mean, people have been asking me all this week, is there anything in gaps? I mean, when I was trading on the life floor, on the futures floor, we didn't have all the technical charts that we have these days. All we had was some girl or some guy, a young junior in the on the side there doing it on a piece of graph paper. And one of the biggest chart patterns we had, or technical analysis we used, were gaps, because we didn't have much else. Didn't really have the you could have a calculator, but we had pivot points. Of course, that's where the pivot points come from, floor trader pivot points. But the gaps, it's like when I'm playing golf. If I see a lake or a pond to the left-hand side, I mean, I don't want to hit it, but my ball always ends up in it. It sort of like draws my ball to a lake or a pond. It's the same as gaps and same as fib levels. They just get respected. But I digress. So let's just summarise here with. So these morning streams, I'm going to come back on mid-morning, and then of course the wrap. Tony's on a couple of hours later. So this is like the pre-opening. I'll monitor the numbers to see if it's worthwhile. Hopefully, if you guys want this, I'll carry on doing it for the next 2 weeks. Of course, we'll be back to normal after the 2 weeks when my day gets back to normal. So the Japanese yen and CAD, this is the 4-hour. CAD is putting on a bit of strength, bit of recovery. CAD's obviously weak. Now there's reasons here. You can explain all this fundamentally. All these three currencies here on the 4-hour, which I think is going to be pretty much the same as the daily as well, in terms of weakness there. So it's a weak. Aussie numbers overnight, which were lower than expected, but nothing big spectacular there. So we've got yen weakness. We know that's a flight to risk to risk on. We also know that the Japanese central bank is talking about keeping its asset purchases at the same rate, keeping rates low, yield differentials against currencies where the yield is where the interest rates are rising. Interest rates are staying low in Japan, and the Bank of Japan has reiterated they want rates low, as the other ones are potentially looking to rate hike. So the yen's low because of that risk on to the market. We know the CAD is low. The CAD is low because of the import tariffs that Trump seems to be targeting for the Canadian in terms of lumber, possibly dairy. Haven't mentioned the energy yet, but certainly the lumber's sort of been hitting the headlines. If they move that into the dairy products, and that's a concern for Canada. We've got Canada numbers out this week, which are retail sales out today, in fact, and GDP on Friday. But Canada's been under pressure because of that. That's also having an effect on the New Zealand currency. New Zealand's been sold off for the back of their concerns about these protectionist trade tariffs with the US. Now, at some point, trade tariffs are not good for anyone. I mean, it's not good for both sides of the party. So, I mean, I don't know if this is going to be something that he can actually carry through. I mean, he doesn't want to start. Trump will not want to start. It will be advised not to start. Just surrounding himself with his own, protectionist boundaries and cutting off trade altogether. It's not good for anyone. That so. At some point, he's making the standpoint, but how much he can follow it through, it remains to be seen. The last thing he wants is the world to think, hang on, well, if the US are going to start taking that stance, I mean, look at China, for example. China owns most of the US debt. You don't want to start upsetting the Chinese. They start knocking out your debt, and then you've got massive problems. They stop buying your debt. They stop buying your bonds every month, and they start selling their bonds to the markets. Your interest rates are going to go through the roof. So there's got to be a certain level of protectionism or trade tariffs that he's going to get away with it. But at the moment, there's concern in there. That's why the New Zealand dollar is off, it's so everything is explained here. The euro is strong and the pound strong. So there's fundamental reasons for all this at the moment. This is very, very obvious. This setup you're seeing in the strength meter, it's all very obvious. Sometimes it's difficult to understand why markets are moving in certain ways. At the moment, it's very clear why they're moving. It's all on fundamentals. And I trade off technicals, so I trade what I see on the charts. But now, for once, the charts are reflecting exactly what you're seeing in the fundamentals, which is interesting. Right, guys. Now I'm gonna have to leave it short. They're only going to be 25-30 minutes pre-market opening streams in the morning. Euro yen we spoke about, pound yen spoke about. Yeah, basically covered what I wanted to speak about. Gold, just a quick look at gold for those of you that trade gold. We are into just off the level of key support in gold. Okay, so I'm looking at gold here at trading 1263. 1255 is a level in gold that I think you should be aware of. It's support in terms of it's resistance in terms of old support. It's also the 200 DMA, daily moving average, which is flatlining moving average. So this could possibly be your base in the gold market at the moment. Again, gold's trickling off on the basis of markets moving into more risk sentiment. US stock markets still holding above 21,000. CAC and DAC is just off its intra-week highs, intraday highs. The Nasdaq, for example, is also Nasdaq. I think is at all-time highs, if I'm not mistaken. There's the Nasdaq trading. Nasdaq, yeah. I mean, we're just off all-time highs there. Nasdaq is all-time highs in the Nasdaq. The other thing about the stock market, I mean, the stock markets are up here, but what I was looking at really yesterday, the stock market is not only up here on the move from risk. The stock market is up here. So we've got some good earnings coming out of the US at the moment. Earnings are supporting these moves. So this is why I think this move to the upside. Now we're having an earnings season. This move to the upside is must be more sustainable than we've seen the last time we got back up to these levels. Last time we were back up here, if you go back to the daily, it was February time. This move up now, it's possibly more sustainable. So definitely keep an eye on, if stock market can push back on up to the, well, where's the next level in stocks? I mean, why don't we? Next level in stocks comes in 21,6400. If you believe the Fibonacci extensions. Right, guys, I've got to get back. Stocks are cheap, yeah, possibly so. Potter, as we're saying. Tony's on at 2 in a couple of hours' time, so I'm going to give him some breathing space between streams. I'll come back on around midday and just to give a bit of a recap, and of course I'll be back on in again for the London recap. By that stage, I'll see if these levels have held. Thanks, guys. I'll speak to you soon. Safe trading. Gosh, it does look. I'm just looking at myself on camera. It does look as though I just woke it up. Right, speak to you soon. Good luck.